Hello and welcome to Property Question Time. I'm Stephen Galpin and this is the show where you can have your property related questions answered by a team of experts. And joining me today is Razaq, founder of Surtax, property industry accounting experts based in St Albans. Welcome, Z. Hope you had a good trip in.
Oh, a bit of a fun, as people may know. It's a bit of a challenge at the moment.
Well, you're here, that's the main thing. Good. And joining Z is John Howard, property developer, investor, mentor, author, and heaven knows what else. But certainly
you got tempted to say something rude there, I felt at the end, Stephen. But
I was getting
but
close.
I'm glad you didn't.
I was just going to say, just with a spectrum of information about the property industry.
Well, I do my best.
Thank
I
you.
do my best.
Well, good. That's what we want to hear. Okay, so I think Z will do you first this time. Can the experts help me, please? At what point would the non-payment of residential rent become deductible from rental income and tax on it? Is non-payment on its own enough to justify relief to revenue, or would I have to demonstrate and prove the loss by perhaps court action or similar?
Great question, and a lot of people need to know the answer to this one. There's two scenarios for this. One is in your own name. If I'm doing a buy-to-let, that's done on a cash basis, so it's not relevant to that because if you don't receive the cash in, you don't have to report it. However, if I get the rent in a limited company, which is based, I'm going to use a technical word, accruals, which means based on the invoice date, then it is important because you have to recognize the income even if you've not received the cash. And to get a bad debt reduction, it's slightly changed from an accounting perspective going forward, you have to prove that you're not going to get it, so i.e. the rent. So you would probably have to have some letters through probably a solicitor to the actual tenant saying, we're not actually going to receive the rent. There's a high probability to claim a credit on that and therefore not have to report the income. So
would you have to wait till the following year?
It depends on which month it is. So
I mean, the reason I asked that question, I'm just thinking, we're limited company or private people, landlords are having a difficult time at the moment.
Yep.
Maybe through increased energy costs or services that they provide to a tenant, or maybe just through tenants not paying. And it's got so tight that for some landlords it has become critical and has put them into a loss situation. Now, so if you're a landlord and you're losing rent this month, next month, and probably into the new year or whenever, have you got to wait until you do your accounts a year later before you claim that, or is there a way of getting some kind of instant relief at the time?
Really good question. It depends on what service you got with your accountant tax advisor. And this goes back to, do you get performance related reporting during the journey, or do you just wait to file it and turn up 8 months after year end and say, oh, here's my accounts, can you file them? And therefore then find out this big headache. A lot of people now who are forward thinking and they're understanding this, what they do is they get their accounts up to 9 months within the year, and then they have the forecast to the end of the year to find out their tax position. This comes up in that review. This is how you remedy this. Don't wait till last minute and then get some nasty surprises.
My accountant never lets me wait till last minute. He always wants me to give him the info about sort of 4 months before the end of the year. But I've always had the feeling that was because he wanted his fees rather than...
No, really good point. So I think your accountant actually is doing a good job there, Stephen, because a lot of people don't explain that to people, why there's a value. Because if you know what it's going to end up your position, you can then influence it. Because if you don't know where you're going to end up, how can you influence it?
Well, it's this business of trying to do things retrospectively, isn't it? Again,
absolutely, yeah. And how our tax system is now geared, there's not much you can do. So for example, if I've got a limited company, and one of my favourite areas is pension contributions, you can do those from a limited company, and if you don't know before year end your tax position, it's a bit late because that's going to go into the next year and you're going to end up paying corporation tax. So really understanding your numbers, what profit there is, i.e. the taxable profit, it could be a huge difference maker.
Okay, great stuff. Thank you very much. John, your question.
Yes.
Do the panel think that rather than spending £7 million per day, i.e. £200 million per month on hotel charges for immigrants seeking residency here, the government would be better off investing in the construction of purpose-built accommodation which would have a lasting value to the taxpayer. And I'm just doing a rough calculation in my head. I mean, 200 million a month, that would build you sort of 2,000 odd
To be
flats.
fair, I think we'll get Z to check your figures, Stephen. But I'm sure you're sort of right.
I think I'm right.
Okay.
7 million a day.
Okay, so this
That's
so
50 million a week.
to be quite blunt about it, if this government got their act together and sorted out a proper asylum,
Well, I think you just said the word if.
System, then hopefully we wouldn't have this issue.
No.
In Ipswich, the local big hotel chain, have just right in the city centre, town centre, have just accommodating. They've got rid of all the staff, and they've now got 350 asylum seekers in there, and that has obviously a knock-on effect to the local shops and so on. And nothing against them at all, but it does have an effect on people wanting to come into the town and so on. So the effect of what's happening at the moment is like a wave, isn't it?
It's bigger than the money.
It's
isn't
much bigger than the money. Now, if I said to you, I'm dealing with one particular housing association at the moment I work with a little bit. They've got 680 empty properties. Wow. Now, some of those they would consider to be in poor condition, but probably good enough short term to house people. And if you times that by a number of housing associations across the UK, you might have enough accommodation to not need to build any specific buildings. However, having said that, if you think this is a long-term issue, and I believe it is a long-term issue, I think everyone probably would agree with that, and that putting them in hotels is not acceptable to them. You know, it's not good enough to be, it's okay being in a hotel for a few days, but anyone who stays in a hotel for a long time, and that with restrictions as well, you could totally understand that's not acceptable to anybody long term. Then providing new accommodation would not be a bad idea. The government, of course, don't want to do that because they don't want to admit it's a long-term problem.
I see. But I mean, I listening to the television the other day, they were saying, well, look, the real problem is that these people come over in boats and they're desperate to do so. I mean, there's 40,000 people done it this year already.
Well, if they think it's 40, my friend who used to work for Border Force for 30 odd years says it's more like 80. It's double. It's
Okay.
double because they don't know half of them have come across.
But the thing is, they say, they've got to apply through proper avenues to come into. But there are no proper.
But they
avenues.
can't unless they get into the UK first.
Well,
Well,
exactly.
that's what I mean
So
why don't they just
buy a great big warehouse in Calais and have a?
Well, when I say it should be sorted out, that's exactly offshore or wherever you want to do it. You can't ask them just to claim when they get to the UK. They must be able to claim elsewhere, otherwise, because that's why they're doing what they're doing. So
buy a
wouldn't
warehouse
have
in
thought
Calais, fit it out with all the Border Force people, which would be a heck of a lot cheaper than 7 million quid a day.
Well, there you go.
And then they'll deal with all the applications.
It
French
never
border.
ceases to frustrate me on a number of issues at the moment going forward.
Could I add a bit to this? Because I look at it slightly differently. I think this is actually something, as a UK economy, we are one of the strongest economies still in the world, whatever anyone says, right? We should be thinking about a longer term strategy, not this short-termism and political point scoring, because this is not a political point scoring topic. This is about people. Right, and I'm even though I'm born in the UK, I've come from somewhere else. My family have, and I think our country here is so diverse, and this actually helps us in the long term because we struggle. But what we don't do is we don't think ahead. We've got all this short-term thinking, and it goes back to when we were talking about housing associations and private enterprise. What a lot of councils, which should be forward thinking, if they're struggling to get properties in place, they should use the private sector, and that will still be more cost efficient rather than using hotels because the premium is higher. So a lot of lot of leasing over 5 years is being done, quite a lot. And I don't know why that's not promoted, where the private enterprise is making money and the council because they're getting used.
It's doing the job.
Exactly. And I don't understand why we don't have a grown-up conversation about this.
See, this business of long-termism, I mean, we take Canary Wharf here. The banks pulled the rug on Canary Wharf because they said it'd never work. Well, I'll tell you what, just pop down here on a Saturday and see if it works or not. You know, we've got the highest grossing Waitrose, we've got very good Marks and Spencers, all the shops are pretty well full. You know, it works very well. But I would just suggest that while we run I'm not suggesting we all turn communist or anything, but I mean, we run we run a democracy which is based on a 4-year cycle. And whilst you've got a democracy running on a 4-year cycle, you're never going to get the right policies, because if you made the right decisions, you'd never get in again.
And what I would say, Z, you know, what you said, I don't disagree with you, but of course it's all about votes. It's all about votes.
Absolutely.
And that's how the Conservatives got in 2019 so strongly, was because of their policies on Brexit and also asylum seekers. And, you know, it's proved incredibly difficult to do anything about.
Okay, well, there we are. That's all we've got time for in part 1 of Property Question Time. Join me again after the break when we'll ask John and Z more of your questions. Hello and welcome back to part 2 of Property Question Time. I'm Stephen Galpin and I'm joined by John Howard and Z Razaq. Welcome back. Z, I'm just starting off on the path to creating my own buy-to-let property portfolio. I've read a lot of advice on the pros and cons of either doing this in my own name or that of a limited company. I am, however, keeping my current job, at least for the time being. In terms of tax, I pay now under PAYE, the employed system. So when I start receiving rent, do I have to inform Inland Revenue, or do I have 12 months before I have to make any declarations?
Really good question. There is a bit of missing information. We'll touch on this in my second part of answering this. The first part is, if I'm buying in my own name, right, I have October 5th after the tax year. So if I look at the 2021-22 tax year, which ran from 6th of April 2021 to the 5th of April 22, I have up to October 5th to register as a landlord for self-assessment. If I don't, I get £100 fine, right? So that's the answer there. With a limited company is when you register the company, then you have obviously 21 months from the incorporation date to submit it. The bit that we're probably missing is whether they're a higher rate taxpayer or basic rate. Because if they're like, and I'll explain this in the previous episode, if they're earning like 40,000 and the rent of this property, because we don't know how much it is after expenses, the gross rent excluding mortgage interest is 20,000, right? That's going to take them into a higher rate position. Whereas if they put it in a company, they will get the tax interest relief, and then they can choose how much money they draw out and therefore stay in the basic rate. Also, it's whether they're married or not, and it becomes a whole list of questions. But this is where the value comes from speaking advice and actually someone who knows what they're talking about, because that cost of having that consultation is nothing compared to how much money it's going to save you.
I think just looking at the tone of the question, it's almost sort of saying it's a you know, one or the other, but it's not really, is it? Because even if you've got a job and you're working away and paying pay as you earn, you can still run a limited company side by side with it, can't you?
Absolutely, and to be honest, that is the preferred method by a lot of people. It does depend on what you're investing in. This is buy-to-lets, and if you did HMOs, limited company tends to be, for most people, a better way, and especially with the capital gains tax annual exemption changes, it's becoming even more the better way of doing it, because you can control how much you pull out. And I think that is a big difference, whereas in your own name, it is what it is.
I mean, I've always had limited companies all the way through from the age of 18. And I have to say, I just think it looks a more professional way of doing things. And of course, the government want everyone to have a limited company now, presumably, so they have annual return. They know who should be paying capital gains and who shouldn't.
In a company, the gain is subject to corporation tax, but the challenge is they've increased corporation tax, which is sort of going back the other way. So it's getting the balance right.
They've increased it, but I tell you what, I still think corporation tax rates are still pretty low.
Do you think so?
I do.
Really?
Yeah.
Really, Stephen?
It depends. Do you
25%?
Stephen's got a point, I guess, in this case of the wider economy, but we've gone through a big change. It's called Brexit. And I know we've talked about this. This has changed the environment, because no longer are we part of a bigger bloc, we're by ourselves. Therefore, the corporation tax rate is becoming more competitive.
Well, we need to be more competitive. I mean, Ireland's 13%. 13%.
There is
25%. 25% for people who are earning over $250,000.
Yeah, it's from
20, yeah.
from 50,000 upwards.
Yeah.
It's actually 26.5% because they claw back from 50,000 to
Oh,
250,000.
you're talking about stuff way beyond my pay grade now.
I think it comes down to, I think John's raised a really good point about different countries we're competing with. Ireland is a competitor of ours, right? If it's a competitor, even with this worldwide agreement that Rishi's got involved in, and it's all over the press, they're saying minimum 15%. One of the reasons why
Keep it at 15% then, eh?
Yeah, one of the reasons why we left Europe was that we could become more competitive.
We can do what we want.
But we've gone the other way,
Yeah.
and we're not incentivizing. So a lot, Liz and Kamikaze, Kartang, I hope he doesn't get offended, it's just how everyone knows him, they actually had good ideas, but they didn't think about the longer term strategy of it, because the stuff like getting rid of IR35, reducing tax, they are good policies.
Just wrong timing,
and not
and
also
poorly articulated, isn't it?
That's it. And
poorly articulated, wrong timing. And at the conference, of course, it's a waste of time going to, of course, because they've all gone now, but I was at the conference and everybody at the conference saying the same thing, good, solid, conservative values, but wrong timing. And badly put together, and they didn't go and check with anyone that it was.
OBR, the Office of Budget Responsibility. There's a reason why we got that. We're not, no disrespect, we're not a developing economy which isn't known around the world. We're a developed economy. We've got processes for a reason. Is how we communicate. Any owner of a business, because that's how it should be. It's called UK PLC, right? It's just like having your own company. You just don't do stuff willy-nilly. You basically have to get advice.
They should put you in charge.
You're being too kind
now.
I'm not. But they need people that really think about the things longer term and are willing to have the stomach to deal with the fallout.
They have got no common sense, very bright, no common sense whatsoever.
Well, all I can say on that is if the government pinch you for working for the government, then we shall expect an introductory fee.
Fee of some sort. I'll have a word I'll have a word next time I speak to someone.
Okay, that's good enough. All right, John, your question. There, you're going to love this one. The government's housing policy seems to be all over the place at the moment. What would the experts like to see the government do to encourage cheaper, readily available housing for young people?
Okay, so...
And don't say help to buy.
Well, that would certainly help.
Did it? Or
it did help.
Or did it make a lot of developers quite a lot better?
Well, I think it did both. And that's a great thing if it can do both, isn't it? So the problem is this. We need to build 500,000 houses a year in the UK. Michael Gove was trying to target 300,000 houses being built a year, forcing the councils to build 300,000 houses a year through targets, 5-year targets. The MPs have voted against that target. The reason for that is because they don't want all these new houses being built in their back garden, basically, of constituents who will vote against them at the next election. That's the truth. So when you've got a situation like that, what chance have we honestly got to build even 300,000 houses a year when you've got such a complex planning system in place? The one thing the government have managed to do is permissive development rights, which was to force the councils commercial to residential, and that's worked. But forcing the councils to do anything else has not worked. Now, if Labour get in a couple of years' time or whatever, they will probably reduce the social housing requirement, which is now 30% over 1,000 square metres, so normally 10 houses plus, it's 30%. They, I think, will bring it down to 1 in 3, which is what some councils did a few years ago, and it got challenged in the High Court and was changed to 1 in 10, basically, to over 10. So that's going to pile more and more pressure on developers. Now, 70% of all houses built in the UK are built basically by the top 10 house builders. They control the market. The idea of Homes England coming in, which was the property government bank, if you like, was to help smaller house builders get in the market and be able to lend them money easier than they get from the normal banks. In the 1970s, 65% of houses in the UK were built by small developers like ourselves. Now it's 15%. The balance is made up of social housing associations and councils being able to build their own houses. That's where you might get more of an uplift. The problem with the 10 major house builders is they're companies who want to make money with investors and shareholders. And at the moment, they're closing sites because the market's not good. They're not building more. They're going to build less next year.
Yeah, but John, you know, when governments say, "Oh, we want 300,000 houses," I mean, who do they mean? We want? Who are the government to interfere? You know, if a developer wants to build houses and he knows he can sell them,
they'll build them,
and he knows they can be financed, he'll build them.
If not, he'll put them on. So the new rules coming in are things like forcing a developer to build within 3 years of getting planning permission.
Well, they just
otherwise,
won't get the permission,
they'll just sit there without doing it. Things like that that's what's coming in. Now, last year, and they had COVID and so on, we built, I think, 180,000 houses. The year before was 232,000. So we've never hit 300,000 for, I think last time was 1962 or something. So it's just not going to happen. There's always going to be a housing shortage, which for some of your clients, Z, of course, is great news, isn't it? Great news.
It is and isn't. I think
happy.
I've got a different perspective as well. I think deregulation is really important in certain aspects, because what I find is
deregulation of what?
Deregulation of rules that allow planning or to allow.
Well, they've
people,
done that with PD,
but they have that's for conversions. But I'm talking about new builds and
no
houses.
chance.
And
no
the
chance.
reason why they've got to start thinking about this is because that's a cost to entry. If there's a cost to entry and you want the private sector to help build it, because we know the public sector has either not got the resources or capability potentially to do it, you have to get that balance right. And the problem is the deregulation hasn't really happened. We're getting more regulation, and that's then a cost to entry. And
but it won't happen because local authorities, you know, you're constantly fighting to get planning with the local authority. They're not saying, "Oh, that's a great idea, we'll do it." They're doing the opposite. The only way you can do it is through social housing. To be honest with you,
do you know something, John? Let me tell you. Let me just tell you. It's dead easy, the answer to this. 100% mortgages, no deposit, and you'll have the biggest housing boom you've ever seen. And you'll have a lot more than your 300,000.
Sorry, on that one.
It's don't tell me it'll create bad debt. It'll create no more bad debt than all these young kids having to pay exorbitant rents and end up owning nothing.
I think one of the best things, and John's mentioned at the beginning, and that was my note for this point, was the Help to Buy scheme. I know developers benefit, but so did people buying onto their thing.
700,000 buyers helped.
And also they also were getting like shared ownership.
Yes.
And that was the big driver, because then you break up the thing. Instead of getting 100%, you're getting 50%. That's giving you the first step.
The shared ownership is a great scheme, but it's not done correctly. If it was done correctly, and that's where the housing minister needs to sort it out. It should be more attractive than it is, because in London, shared ownership, where you own 50% of the house, should work, shouldn't it?
It should.
It should work, but it doesn't.
It doesn't, no. Okay, gents, thank you very much indeed. That's all we've got time for today. So, John Howard, Razaq, thank you both very much for coming in.
It's a pleasure.
Thank
Great
you for having us.
answers as ever. I'm Stephen Galpin. Join me again next time on Property Question Time.